All right, well, welcome to March. I can't believe it, Joe. That's here. It's welcome to again another update with Mike and Joe. It's hard to believe. Today, what a beautiful day. It was I think we tickled 60 today.
Yeah, there was a little eerie feeling up there with some sunshine on your face.
I know.
When you're walking outside.
I know. I got a little brave. I broke out the summer blazer today. Hopefully, we don't have to put it back.
That's it.
Anytime soon. So honestly, Joe, I brought this basketball with me today to kick off, obviously, another month of March Madness. We're excited about it. Can't believe it's here again. I guess let's kind of start there. Obviously, we have one of our signature events is going to be coming here within the next few weeks. So why don't you tell everybody about it and how they can get involved?
Yeah, so every year we do our March Madness for Charity Bracket Challenge. Mm-hmm. And what that is our loan officers each pick a charity of their choice. Mm-hmm. And then they invite people to play on their team. Mm-hmm. And what constitutes playing on their team is filling out a bracket.
Right.
So you fill out the bracket just like you would any NCAA pool, and each round there's winners that get announced. But at the end, the loan officer that has the winning bracket actually gets to make a donation to the charity of their choice at the bank funds.
That's great.
So it's a great event. It adds a little fun. I know I usually don't do a March Madness bracket just because of the amount of times I've been wrong.
Right.
So I've decided that my money is better kept in my pocket. Than filling out a bracket. But it's a fun way. It doesn't cost anything. And it's a fun way to get involved in March Madness. Even if you don't know what the teams are, who they are, you pick them by color of the uniform, whatever it might be.
Exactly.
It's a good way to get involved and potentially help some charities out as well.
Yeah. You got to pick some upsets, Joe. You
always got to
pick some upsets. That's the big key. So, well, listen, for those folks that are listening right now, please join or at least do the bracket. It'll be a lot of fun. Giving back to the community is always the right thing to do. So
then we're also don't forget about our event.
Our event, right.
Yeah.
Let's talk about the event.
On March 21st, we're hosting a second day of March Madness. Mm-hmm. So we'll hosting a little get-together at Hooligans in Webster from 1 to 5 for all our realtor partners to come join us and have a drink and watch some basketball and maybe some food.
Have a little wings.
Yeah.
So that's great. Well, please come out. Let's have some fun. Well, let's switch gears to real estate. Obviously, we're moving into spring. Joe, it does, the market itself, does feel, still very, tight. Obviously, the listings really haven't, picked up a lot, but without further ado, why don't you share with us some of the stats and what we learned from February?
Yeah, I think as we've seen in most winters, especially January and February, we've been in this frozen tundra of inventory.
Right.
Not a lot of houses on the market. Right. Stuff that's there, that's nice. Continuous conversation of, multiple bids, going over ask. We've been seeing some more of that activity, and then we've been seeing the activity where the houses aren't listed. Are listed where maybe potentially they should be from a price perspective, where there's less activity, but all it takes is one or two people to drive that offer up.
Right.
And so somebody really likes that house, they're gonna drive that offer up with some escalation clauses, and we continue to see that. So, in Monroe and surrounding counties, as we track the numbers for February. This was interesting. So our average list price in January in the Monroe and surrounding counties was $233, and in February was $260. So big jump in list price. And then we finished the month in February averaging 8.04% over ask versus 7.86 in January.
Okay.
So some different types of houses, higher price points getting listed on the market. Government volume dropped to 10 government applications in February, which is about 11% of the volume in Monroe and surrounding, compared to the 21% we saw in January. And then in Monroe County on its own, we did see a jump in average list price, $244 to $272. But interestingly, in Monroe by itself, we saw a decrease in the percentage over ask from 10.73 in January to 9% in February. And government volume was down as well. 12 government applications making up 17% of the volume. Again, we look at what are those hot zip codes we're seeing. The 14609 zip code, we saw 6 transactions in that zip code, average of 19% over ask. Webster, we actually had 14580. We had 5 transactions there, which were averaging about 6.82% over ask, and then 5 in the 14611 as well. So still seeing some of those same zip codes pop up, the more popular ones that we're able to get through. Then when we head down the street to Onondaga County here, different story, as we've seen in most of the last year and this year as well. In February, we were 1.37% under ask, which was up slightly from 2.1% under in January, but still averaging under ask in Onondaga and surrounding. And then in Onondaga by itself, we averaged 2.69 under ask in January, and we went up to 0.1 under ask in February. So a little bit of an increase, but still seeing more of a flat market relative to list price in Onondaga County. And then our hottest zip code with 3 transactions was Auburn, 13021, and it was an average of 1.14 under ask.
Okay.
So, still seeing similar activities as we have the previous couple years. In Rochester, particularly Monroe County, again, a lot of that competition where, March being the month of luck,
right.
It takes a little bit more than luck to get your offers accepted and get your loans through to the finish line. A lot of that involves, just as we've talked about, aligning yourself with the right team. And that starts with your loan officer, your real estate agent, the operations in the company that you're working with to make sure that everything goes smoothly. We think about how many transactions we do on a yearly and monthly basis, and I kind of liken it to, airlines, right? How many planes take off and land every day? We've been hearing a little bit more in the news recently about airlines, but realistically, most of the time it goes smooth, and it's really with who you're aligned with and how does that happen.
They really just have to get their buyer as prepared as they possibly can. Putting together a plan for that buyer that puts them in a position to win. I think, Joe, one last thing before we leave the data, when I looked at just some of the detail here, a lot of it is still very zip code specific. So when you're working with a buyer, looking at those data points for each community, it's important because what's going on in one zip code could be really hot, another could be softer. Sharing that with the buyer is really important.
Absolutely.
Yeah. So, Joe, in regards to mortgage rates, obviously a lot's been going on this past month down in D.C. as we've discussed. It was a month ago that things were just beginning to take shape. Some things were getting discussed. But in obviously this past month, there's been a lot of moving parts that the financial markets are really trying to navigate. But at the end of the day, we have seen a slight reduction in mortgage rates. Can you kind of talk a little bit about that?
Yeah, we've definitely seen some movement over the last month and a half where rates have come back down. We're probably sitting right now in the high 6s from a 30-year fixed perspective. I think the email that got sent out this morning was 6.77 was the national average for rates.
Right.
And that's positive to see. It's still to be seen kind of what's driving that movement. There hasn't been a ton of data coming out that would say one way or another. We haven't seen, extreme unemployment numbers or extreme, we have seen some flight to safety with the turbulence and the volatility in the stock market. We have seen some more investors move to the bonds, and that's been driving the bond pricing down, which is in turn driving the 30-year fixed mortgage rates down. And I think we got to expect a lot more of that volatility as we move forward, where we may see that 10-year start to retreat even more because this is the past week or so that the stock market has really taken a hit.
Right.
And usually that's what happens is you see that sell-off and that retreat to safety in the bonds to kind of protect your investment. So, it's encouraging from the interest rate side because we're seeing rates come back down. So a lot of clients that have closed with us over the last 2 years have been part of our Rate Relief or Rate Relief Plus program, which entitles them to, when rates do drop between now and the end of 2027, to have a refinance where we're going to waive our processing, our underwriting, and our appraisal fees to basically help them refinance into a lower mortgage rate with the potential of qualifying for a CEMA as well.
Right.
So, again, that program is out there for anybody that did close a mortgage with us that is interested or thinking about refinancing, or would just like to have a conversation about it. Reach out to your loan officers that helped you with your transaction.
Right.
If you're not sure who that was, reach out to me, and I'd be glad to connect you so that we can take a look to prepare and understand when is the best time to make that move.
Right.
And if you closed at a 7.5% rate and your mortgage balance is $150,000, it may not make sense to refi at a 6.75. But if your mortgage balance is $450,000 and you're at a 7.5, that 0.75% of movement is going to make a big difference.
Right. Exactly. So again, more to come on that. We'll have to see where rates go. And obviously, we're going to keep everybody updated each week when you push out your Monday Minute. So Joe, we wanted to start a new segment called kind of Big Wins,
Yep.
And I think, one of the things that we want to kind of point out and share is that, success does leave clues.
Yep.
We want to kind of share with everyone, those wins that we experience that we hopefully it's not just a one-off win, it's a win that we can replicate. I know we had some this past month. You want to share with the folks?
Yeah.
what
So,
happened?
as we've shared on this podcast, we've rolled out a ton of products.
Yep.
And so what we wanted to start to do is highlight when those products get used and how they're getting used, to help a homeowner get into a home. So this month we had a loan that actually started as a jumbo loan. The borrower was self-employed. As we dove into the tax returns a little bit, we started to realize that the income that they were showing on their tax returns didn't really match the income that they were making. And we see that a lot when somebody's self-employed, between the write-offs and so forth that we can't add back from a Fannie Mae or jumbo loan qualifying perspective. Right. You kind of can run into issues. And typically we would pivot that to our portfolio lending, where we can be a little bit more flexible when it comes to calculating the income and understanding it. But we just had a program that we rolled out for the use of business bank statements. And so when we took a look at this client's bank statements, we realized that he did qualify for this program where we could use the business bank statements to calculate his income, which was enough income for him to qualify for a jumbo mortgage with a 30-year fixed rate and at a rate that's pretty competitive with where the jumbo rates were when we set out with him, just a standard conforming.
So
jumbo.
Joe, just real quick, so people can, when you're looking at those bank statements, what are you looking for?
So we're looking for the deposits. How many,
Okay.
what are the deposits that are being used? And there's different ways we can calculate. Sometimes we have to calculate an expense factor.
Okay.
Sometimes we could just take a straight 50% of those deposits and use that and use that as our income. So there's different ways that we have to analyze it. But having that flexibility to shift gears, because if we didn't, we would have had to say, I'm sorry, you don't qualify, turn the loan down, have some agents that were upset, right? And a seller that would have been upset, a borrower that would have been upset, take some reputational risk with the ability to be able to pivot into one of these new programs.
And I got a competitive 30-year fixed rate.
Competitive 30-year fixed rate, and we were able to save the deal ultimately and get it done.
Right.
And so that was a big win.
Yeah, it's great. So we'll keep those, each month we'll bring out those big wins and continue to share them. So just again, one last program highlight that we did want to talk. We've talked about this before, Joe, and you just mentioned it. But just for the benefit of the listeners, and I think it's important that we continue to share this, is to try to quantify the number of transactions that we do under a particular program. It's one thing to roll something out. It's another thing for it to get rolled out and get used a lot. And if it's getting used a lot, that must mean that it's an attractive program. And so with Rate Relief Plus, again, to just remind everybody kind of how it works, how people win real quickly, and then we can kind of talk about how many we've actually done.
Yeah, so the Rate Relief Plus, it's our lender-funded 1-0 buy-down, meaning that we pay the difference of your mortgage payment. So if your rate is a 6.75, we would, for the first year, pay the difference between the 6.75 and the 5.75. So we would basically put into escrow that difference in payment times 12. And every month when you make your payment, you're making your payment based on that 5.75 rate. And we're supplementing it from the escrow account to make that payment whole based on the 6.75 rate. So it's a way for borrowers to have a little bit of a lower monthly payment during the first year of the mortgage, particularly if we're thinking that rates are going to come down. Or, we see this used a lot when somebody's selling a house, right? You're carrying two mortgages, you have a little bit of a break by taking that buy down program and having that lower payment for the first year. And it's a pretty significant savings.
Yeah, that's cool. So, well, again, Joe, we're excited about March.
Yeah.
Obviously, we hope that this weather continues to be nice like this. I do think, particularly for us folks here in upstate New York, I could notice today that I was actually driving back from Syracuse to Rochester. People were actually, as they were driving, actually smiling. Maybe it's just because of the sun.
Could have been
I don't know.
sunshine.
But
Or they could have been excited because then you were recording the podcast today.
exactly. But listen, we're excited about March Madness. Come out, join us for our event. Get involved in the bracket. Let's have some fun, and hopefully spring is right around the corner.
All right.
All right,
Don't
guys.
drop the ball.
Okay, thank you. See you. Bye-bye.